Good afternoon and welcome to BizTech's ASEAN Midday Market Watch. Our guest today is Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank in Singapore. Vishnu, it's always great to have you this Monday.
Always a pleasure being here, Brian. Thanks for having me.
Now, markets in Malaysia and New Zealand are closed today. We're going to start by taking a look at the cryptocurrency market. Bitcoin is at 36,315.9, up slightly, 0.64%. Ethereum is at 2,774.92. It's up slightly, also 3.54%. Now, this SGX STI index is at 3,178.21. It's up 0.86%. Now, looking at the rest of the region, we've got the Nikkei, which is at 29,050.26. It's up 0.38%. And then we have the Shanghai Composite, which is at 3,584.18. It's down 0.21%. The Hang Seng is at 28,695.18. It's down 0.77%. The ASX 200 is at 7,290.4. It's down 0.07%. And rounding up the numbers, we've got the Kospi, which is up 0.36% at 3,251.76. Now, what's your view on market performance this morning, Vishnu?
Well, I think it's defined by its lack of conviction. We did see that U.S. markets were higher. Whether they were trading the Goldilocks non-farm payrolls or not, we're unsure. The numbers are slightly softer than expected, but strong enough to keep the belief in the recovery intact without being so strong as to inspire fresh fears of the Fed tightening. That mood, however, doesn't seem to have translated in Asia. There could be a multitude of reasons for that. One of which may be that Yellen, again, whilst talking up the need for the fiscal stimulus, in fact, she refrained from that word stimulus in saying that it's actually a structural spending needed to lift.
400 billion a year.
Yeah, so I mean, her take is this is not stimulus, this is structural spending. Yeah. But in saying so, she also mentioned that if a byproduct of that was higher interest rates, it wouldn't be a bad thing. So I think that got markets a little bit nervous because markets often tend to conflate Yellen with having an inside track on the Fed, whereas we should look at the two as being quite distinct and different. I'm sure Jerome Powell will beg to differ on interest rates moving imminently. And to be fair, Yellen didn't indicate any imminent changes in interest rates either.
Now, markets are also concerned about China inflation numbers. The numbers, China's May export numbers actually missed forecast. In terms of inflation, you have a different view. Tell us why you think the worries are in fact misplaced.
I mean, I totally concede the fact that the coincidence and the conspiracy of factors driving cost pressures are quite acute. So you've got the capacity constraints, the reflation trade, things that we've been through before. Yep. China's PPI numbers coming out, it was almost 7% in April. It's expected to be well above 8% for May. That's inspiring fears because it's a multi-year high. And the sense is that China, being the factory of the world, will then pass on these cost pressures and amplify them, not just from upstream commodities and freight, but also downstream manufactured products. However, if you look at the evidence, the pass-through even within China's supply chain from raw materials to manufactured product tends to get muted. And we know for a fact that Chinese manufacturers have got margins to play with, in which case China, in our view, at this stage, continues to be an inflation suppressant rather than an inflation amplifier. And for that reason, we're not overly concerned about China's inflation per se. Even the policymakers think it's a transitory cost push. What China risks really we should be keeping an eye on is the inability to balance between frothy asset markets and the need to inspire growth at certain pockets of the economy. So that, I think, is far more worrying than is a simplistic China cost push through to the rest of the world.
Now let's move on to the ECB. They're meeting this week. What are markets concerned about, and what are signals that markets are looking for?
Well, I think ECB is not so much the Pied Piper that the Fed is, as it is a symphony. And markets are confused as to who to pay attention to in this symphony, because you still have got the inflation hawks, people who want to stick with the single mandate of price stability, and hence may be averse to doing a lot more in terms of stimulus, given that price pressures are building. Yet, on the other hand, you've got parts of the ECB Council that's taking a view that they should shift towards a Fed-like policy in tolerating inflation slightly above the target. There are two key differences. One is the ECB is single mandate. They only look at price stability. Fed is dual mandate. The other key difference is all along, the Fed's target was 2%. And that's it. Whereas the ECB was more nuanced. Theirs is slightly below 2%. That tells us they have a bias to price stability.
Right.
So what would move markets is if we get either the hawks or the ultra doves that we haven't seen before coming out louder than expected, that can cause a bit of swings in expectations. And we can expect that to filter through not only to the European bond markets, but also to the euro and the dollar FX outcome. So this is what I think markets are unsure of. And to be very clear, I don't think the ECB would commit one way or another just yet.
Now, playing into these fears of inflation, oil markets have been on a tear. We hit $70 earlier this morning before it retraced back. This is the best numbers or highest numbers since I think October of 2018. Now, what's causing this, and what is your outlook for oil in Q3?
Well, we think that part of this is a supply effect, because the prospects of Iran's supply coming back on quickly has somewhat faded, given there's some delays in the nuclear talks, so on and so forth. So that's a temporary supply side impact. Another supply side impact that's come through temporarily is also the fact that Saudi is suggesting they're not in no rush to ramp up production, just because the IEA has suggested that demand is probably going to outstrip the supply rate in the second half of the year. So the Saudi's point of view is we'll believe it when we see it and respond accordingly. I think we're fussing the details, because here the bigger picture is Saudi and the rest of the OPEC Plus want to respond. It's just that they don't want to move too hastily that they undo all the good they've done. So I think that's their starting point, in which case oil supply response is going to be a lot more reliable, even if slightly delayed, and a lot more sure than anywhere else in the commodity world. And on a year-on-year inflation effect, oil is going to cause a transitory surge, but then it's going to level off. And B, in terms of multi-year highs, oil is not there, because when we talk about other commodities, we're referencing to 2011 boom levels.
Correct.
Oil, we're not. So for those reasons, here oil is like a China. We think oil will be a stabilizer for inflation rather than a propellant, and that's where we differ. We could fall on our faces on this one, but it's a bet that we are willing to take, given the dynamics at work right now.
Vishnu, final question. What are the key data points and events we should be looking out for the rest of the week that will move markets? We talked about ECB meeting. What else should we look out for?
And this is just a recap. Of course, we are looking out for China numbers. The two numbers we want to pay attention to. One is, of course, the inflation numbers we spoke of, particularly on the producer price pressures. The other one, of course, is China's credit creation data. We want to see at what pace they're tightening, and it's still too difficult to tell from just one data point, but certainly we'll be watching for that. We will get some revisions to Q1 GDP numbers, but these are all rear view images that we are not too perturbed by. What we really want to keep a look out for beyond the ECB meeting and outcomes is the follow-up presser and anything that comes out in terms by way of discussion. We want to keep a lookout for the Ren effect, so to speak, because Ollie Ren on the ECB Council is the famous one to come out quite expressly to say that they should move towards a Fed-like policy to let the economy quote unquote run hot. So I think that will be, to me, a big policy shift and a game changer in the near term.
Now, Vishnu, as always, thanks for your insights.
My pleasure.
Now, we've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia for business and technology conversation. Please like and subscribe our Facebook and LinkedIn pages. Thanks a lot for tuning in.